Okay, guys, Isaac here. Today is Wednesday, the 30th of May 2018, and just realized that my previous video was recorded without the audio. It wasn't configured to my Blue Yeti microphone, and the audio quality was pretty shit. So I'll record another one now, but this video is going to be, I'm going to be talking about an interesting not trading tactic specifically, but an interesting point that I want to make on a specific market, which is Australia 200 ASX, and in a specific time frame, the 3-minute time frame. As you guys know, all the guys from the group there, I've been trading Oliver Velez method on indices for about 4 to 5 years now, and he trades the 2-minute time frame. Some of his followers trade even the 1-minute time frame, but I personally like more higher time frames. My main time frame is the 3-minute, it's the 10-minute. But I've noticed something really interesting when you wanted to do what the Oliver Velez sometimes calls anticipatory entries on a trade. So the way I use is this: I trade the 10-minute. The trade has to be in the favor. 80% of the time, that's the safest trade you do. And as you know, in trading, there's nothing really like absolute true, so I try to trade in the direction of the 20 moving average of the 10-minute time frame, and getting that though sometimes the best entry is actually by the 3-minute time frame, and I'll show you exactly what I mean on the chart here. So let's switch to the chart. That's a very nice move today, and the entry would be here. So you have the 200 moving average, as everyone knows, according to Oliver Velez trading method. You would enter here. 200 moving average is a very important support, and then look how he holds so well on this 3-minute time frame. The problem with the 200 moving average is that, of course, with any moving averages, is because number one, they're delayed, and number two, they change depending on the time frame. So, but I've noticed that Australia 200 actually respects the 200 moving average very well on the 3-minute time frame. So this is the entry. There's not much volume here. There's quite a bit of volume here, indicating that it's a potential bottom. And you just, enter here. Look at the number of points in the first target, 9 points up to now. Of course, 22 points. Of course, it's very easy to look at the charts when it's already, everything has happened. But this is the entry I would make. At the open, I'm not a big fan of trading the open. You see here on the daily chart, you have a beginning of a pullback of this whole move, but the RSI and the on-balance volume are both very, very bad looking. Just trying to recover a little bit, but as I said, Oliver Velez method doesn't usually use any indicators. I like looking at the daily chart and seeing what the potential major move is going to happen, because I like sometimes to hold my trades for a day. I'm not a swing trader, I'm a day trader, but I do hold trades sometimes for a long time. So as I said, this is one entry here. You get a lot of volume here. This is actually a very, very nice entry, because you have the VWAP acting as support. You have the 20 moving average rising, 8 moving average rising as well. One thing that I have to be very careful on those days, because the market is actually on a downtrend here on the daily. It's below the 20 moving average on the daily, and as I said before, the RSI and OPV are actually looking quite bad. What you have to do is be very careful with the pullbacks, because they happen very quickly. Let's say that you trade the open here, this hammer. You would have got some 5 points, 6 points here, and then it would have come back all the way. I usually don't close immediately. I hold, and again, look at how the 200 moving average, the one in red here, holds the price, and then it goes back, and you would have made some 20 points. 19.5 is actually a quite nice trade that I missed. But I don't, as I said, I don't like trading the open. If you look at, there's other reasons why I wouldn't enter this trade. One of them is that if you look at MetaTrader here on the 5-minute, you are on a resistance area, which is the 61.8 of Fibonacci. The market actually opens right there, and you have the PDC, which is also serving as support, the previous day close. And again, just like I mentioned in the other video I recorded today for the private group, the market is starting to do pivots here. As it opens here, it's already making a new high. So you have those two tops, right? Two tops here, and this is actually slightly higher high. Doesn't make a new bottom, and then it makes a new high here. It closes quite well, and it forms this hammer. It did make a bottom here, but that's then it doesn't make a new low, and it makes a new top. So that's what I was trying to explain to you guys about pivots. If you want to get reversals and those days where the market is very strongly on the way down, you have to be very careful, because you create this bias just to sell. Today was a clear example that not just because the market is going down like this all the way. See, there's many points here. So the market dropped overnight 83 points on ASX. Is a very significant drop. So, and another tip that I also like to give you guys is to always zoom out your charts. You have the I have a problem here with the MetaTrader 4. VWAP is normally it screws up. It just doesn't. This indicator is the best I have. If you guys know any indicators, actually, please let me know. But the VWAP here, which is this gray line, usually gets messed up as the day opens, as the every new candle. So you have solution I found for that is just to switch to the daily candle and then back to the 5-minute. So anyway, that's my point here is at the open I didn't feel like trading because of the resistance area that we were in. So we opened at a 61.8, and the market actually does this aggressive pullback here, which is this one bar here on the 3-minute, and then you could have easily, if you held the trade, very short stop, and again you have the PDC here, you have the 20 moving average rising, the market is making new tops. That's a situation where you want to try a buy instead of sell, even though the major trend, as you can see here on the 50-minute time frame, which is the same as the 60 minutes. Okay, many people ask me why I use 50 minutes instead of the 60 minutes, 1 hour. Is exactly the same, guys. If you look at the bottoms on the 50 minutes, it's not going to make any difference. The reason why I use, I've explained to the group, people already know. I'm not going to go through this right now. But the point is, what was I saying? The 3-minute time frame. Yeah, that's as discussed before, volume is extremely important indicator. The only indicator you should use, in my opinion, apart from the moving averages, which is another indicator, which is a lagging trend indicator, trend following indicator. So yeah, the 10-minute was good today. And look how the 200 moving average is actually becoming a resistance on the 10-minute time frame. So you can be really successful actually trading ASX. The market doesn't move much as much as many other indices. There's many other problems with the ASX. One of them is that because the market doesn't move so much, your risk return usually is not that as great as DAX, for example. Then you have to go a little bit heavier. And if you go heavier, then what happens is your stops become bigger, and so you have to really filter your entries and look at the higher time frames. Even if you're trading in small time frames, you should try your best to go in the favor of the major time frames and looking at support and resistance. So you say, but you could also say here, for example, that on the 10-minute time frame, prices above the 20 moving average, very significant reversal indicator here on towards the end of the day. And the market does this beautiful candle here on the 10 minutes. So should you buy straight away? I don't usually do that, not at the open. But this pullback here is slightly closer to the 20. You see, there's less distance here, so you have 3 points only. Whereas here it doesn't look like much, but you have 5. So it's just, as many professional traders say, charts will not predict the future, will not predict where the price is going to go. It's just going to give you an indication of the potential move. There's nothing is guaranteed in this game. And also what charts are very useful at is to give you not just the edge or the probability wise, which can be very a very vague term when you talk about probabilities and charts actually being useful for giving you an edge. I don't quite buy that. I don't quite believe in that. But what I really believe is that the chart, because of the candles and the way the price is moving, it will give you a very good risk-reward ratio. And that's, to me, one of the main benefits of being a chartist and looking at charts and using candlestick patterns, specifically. For example, using moving averages, looking at support and resistance levels. Even if you remove the 200 moving average here, it's just like, this is a very perfect example where I feel even a little bit biased by saying that, because it's just, this is a textbook example. But let's hide here the 200 moving average on this chart. And if you want to just draw this. Look at how incredibly accurate. 1, 2, 3, 4 candles. What do you think is going to happen next when the price is above this area? I don't know. Like, the 200 is not here. So, but it's just incredible how much of a coincidence that actually. And see, like you can kind of see that on the 10-minute time frame here. There's touches and stuff. But if you really look at those areas as support areas, and let's say you want to enter here, you have many reasons not to enter as well. You have I mean, not of this trade, you don't really have many reasons not to take this trade, because even though the VWAP is here serving as a little bit of a resistance, you have the close very close to it, and everything is a range. Nothing should be really perfect the way this 200 moving average was here on the 3-minute time frame. That's why I felt like it's a little bit unfair actually bringing that up, because it was just probably a coincidence. So but 20 moving averages or 200 moving averages, any moving averages, or even the VWAP, which is not a moving average, not a moving average, it's all about areas, right? So it's never really specific. So I think I went a little bit off topic here, but the point of the conversation was to point out the 3-minute time frame, how moving averages are actually very important, and forget about this bias that RSI is down, everything is down, WBV. Look at the indicators, it suggests the major trend is down. Doesn't mean that you don't have to take the trades on the against the 15-minute time frame, against the daily. Right, because as a day trader, you're going to trade those small time frames, like the 3-minute and the 10-minute. The 20-minute being a lot more reliable. So if you have those two aligned, that's great. So if you have the 3 and the 10 aligned, and not in a very big resistance, why wouldn't you buy here? It's not just because of the 200 moving average here, but also because of this support here. I'm going to move this yellow line. You're going to see. Look at those touches here on the 15-minute time frame. And again, this could be 1 hour. It won't make any difference. Let me change this to prove it to you. You're going to see exactly the same points, right? There you go. So you have here the two, it looks even better even on the 60-minute. You have those two candles here, then the market from this point, last time the market was here, it moved fucking 50 points, and then you have another, 40 points move here. When it dropped from here, because the trend it dropped another almost 40 points. So yeah, you must expect some sort of, so when he reached this level here, it dropped that much. So that's the things that you have to look at. The same way you should be looking at support and resistance levels around here. Look at these again for the third time, I don't know, fifth time. I'm doing the same thing, being repetitive here, but this is actually extremely important. A lot of people that are not successful using Oliver Velez method, which is probably more than 80% of the people that actually start following his strategies and methodology, they don't have this concept of support and resistance. They think that the market is all about candles, and that's probably a problem that Oliver Velez has in his course, because he doesn't talk about support and resistances. I think that's one of the biggest problems in most trading courses. They focus too much on the candles and strategies and entries, but they don't focus on support and resistance levels. That's extremely important to me. Even methodologies like guys like Alexander Alder, he focuses too much on MACD, on all those indicators, which are okay. As I said, I use some of them, especially on the daily chart, even though I'm not a swing trader or a position trader. I'm a day trader who uses this. I think it's important to look at the daily charts. But yeah, it's and those things only come after you have a lot of losses, and then you try to, do your trading journals, and then you look at, what were the mistakes I made, and then realize that there's a lot of things missing. So that's it for this video, and I'll upload now, so you guys can watch it soon. Thanks.